Hi everyone and welcome to the weekly update with me, Rich Perry, market analyst at Handtech Markets. Each week I'll take you through the key events that I believe will be driving your investments in the coming days. And moving into this week, there are a couple of key fundamental events that are going to be moving these commodity markets. Now on Thursday we've got the biannual OPEC meeting, which is potentially going to be the most important meeting at OPEC for several years now. You've had the oil price that's been falling consistently over the past few months, and this has been building up to this OPEC meeting whereby there'll be discussions over potential production cuts. Now, Saudi Arabia have been avoiding these production cuts and seemingly playing a bit of a game with the markets, and that will be of key concern for countries such as Iran and Russia this week and in this meeting. And how the markets react to these to the outcome of this meeting could be crucial. We could have an enormous spike higher potentially in the oil price if they do engage in production cuts, or potentially a spike lower if they choose not to. So there could be some significant movements either way. Now the second key event is going to be this Swiss gold initiative, which is a referendum in Switzerland over whether the SNB needs to start buying gold. Now if this goes through on Sunday the 30th, if the referendum is positive with a yes vote, then it could kick off a chain of events which could make gold push significantly higher. Now I think the volatility in both these events in the run up to them could be quite important for the markets. So through last week we had a couple of key central bank events that certainly drove the markets, and those still have a legacy moving into this week. Certainly with the foreign exchange markets, the prices on the euro certainly fell dramatically after Mario Draghi talked last Friday, still alluding to the fact that he was driving towards quantitative easing in terms of sovereign debt purchases in the eurozone, and the euro significantly weakened on the back of that. The price of the euro now is testing the 23.57 support, and it continues to put pressure on that. It certainly looks like any sort of rallies are being used as a chance to sell, and I think anything sort of back towards the 124, 125 area I think should be again seen as a chance to sell. Now in terms of cable, it consistently is pushing lower, and I think that this consolidation that we've seen in cable recently is again just a bit of a stopover. It's not going to be moving any much higher, and I think once more any sort of rebound is a chance to sell on cable. I think that once again it's going to be retesting that low 55.88, and I think once that is broken on the downside, I think we could see further lows down towards the 54.25 area. So in terms of dollar yen, what we're looking at is consistent gains on the upside, consistent higher lows and consistent higher highs, pushing higher, support found at higher levels. And I think that the recent correction that we saw on Thursday and Friday once more should well be used as a chance to buy. I think this support in the band between 117 to 117.50 I think would be an ideal buying area, but I think anything between 117 and 118 with the price already on Monday looking to break higher again, I think we're looking as though that dollar yen will be pushing higher once more to retest that 119 mark. So moving on to the indices, in terms of how Wall Street reacted on Friday, it was a little bit muted in terms of how the fact that the eurozone markets pushed significantly higher, whereas Wall Street continues on its merry way, just edging higher, not shooting the lights out, but still making those gains. Now Wall Street continues to push into new high ground for the year, and that's a 45th all-time high that was posted on the S&P 500 this week, on Friday, and it continues to look strong. They've now got a higher support band between 2020 to 2040, and I think any dips are going to be still seen as a chance to buy on the S&P. It's very strong still. In terms of the European markets, as I said again, they look very strong on the back of this central bank easing, certainly in light of the fact that the People's Bank of China also had a surprise rate cut on Friday. That boosted the risk sentiment throughout Europe, and the pressure that had been seen on the DAX is just a thing of the past now, because it continues to push strongly higher. It's now looking up at the next resistance at 9,891. CAC again is also very strong. The CAC's now looking up at 4,510 as the next resistance. FTSE's a little bit underperforming the other two, but certainly it's also still looking positive. And you'll be finding it's increasingly now, people are going to start to talk about the old highs again, around that 6,900 mark. So gold, as I said, again the Swiss gold initiative is going to be the main event for gold this week. It has been finding support at higher levels and pushing higher. Now it's moved back above that key old ceiling at 1,180, and that's now being used as a basis of support. And I think the gold price will look to try and edge back towards that 1,200 mark. If it can find support and continue to push higher, I think the outlook will continue to improve. But as I said, the volatility through this week makes it a little bit uncertain. But I think in terms of the technical outlook on gold, continues to improve. So what are we looking at in terms of the key events this week? Well, we've got the BOJ minutes of that latest Bank of Japan meeting that we had last week. That comes out on Monday evening. Not a great deal expected out from there though. But then we move on to the key US events this week. We've got the second reading of GDP on Tuesday, along with the consumer confidence, and then on to Wednesday we've got again the second reading of UK GDP. So both those US and UK GDP numbers are not expected to change all that much from the first reading. And then we're looking at the US data that sort of has been brought forward a little bit because of the Thanksgiving holiday that we've got on Thursday this week. So we're looking out for the durable goods data, and also the Michigan sentiment, and also new home sales as well. So Tuesday and Wednesday could be a little bit more interesting, certainly from the dollar perspective. If we get some strong US data, that could start to drive the US dollar higher again. And then on to Thursday, we've got Thanksgiving. We've also got that key OPEC meeting, which again is going to be causing significant volatility in the oil markets. And also we've got Japanese CPI on Thursday. But then Friday we've got the key Eurozone event of the week, which is CPI, which is the first day look at CPI for November. And that again could have a significant impact on the euro. So quite a lot going on throughout this week, despite the fact that we've got Thanksgiving for the States. I think it could be again quite a volatile week. So I wish you good luck in your trading through this week, and I will speak to you again next week. Thank you.